All right, everything looking good. We are live. Go ahead and get this stream a rocking and a rolling. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday, 8 p.m. Eastern Standard Time on January 4th, 2023. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. So let's go ahead and get ripping. So right off the bat, I will take a look at TNX. It had been putting in some strength here, started to pull back below the 821. So we'll see what happens here. Losing the 21 was important. Obviously, it's going to start looking like a potential internal retracement, as not only did we hit that 0.5, but we back tested that key red resistance as well. So not being able to get above that, makes it much more possibility that we're going to continue the downtrend. We know obviously the target initially would be the 200 exponential and simple. We'll see about that. We're also in the bullish control zone, but Stochs are rolling over. We crossed back above the slope line and the histograms are rolling over. So it's not crazy to think we come down here, put in a higher low or potentially even a lower low, and then continue to the upside. But at this point in time, we're not seeing any divergence or anything like that. We're not seeing any signals of, craziness about to ensue. I think a lot of this going to really, I think rates are probably going to do not a lot of anything or not much of anything until we see that next Fed rate hike. So I think the market really wants to see, hey, is the Fed going to go another 50 or are we going to go to 25 and then, start anticipating potentially zero after that or a pause, etc. So let's pay attention to oil now. Oil is very important. Obviously, we've been talking about the four horsemen for quite some time, and we know energy spike is the final horseman, and we know the heart of the majority of it is oil. So we got U.S. oil here, and we confirmed into the bear market, officially below the 200 exponential and simple, and the slope flipped in November. Prior to that, we had come down quite a bit. It's no secret that we put in our high, a low, lower high, and then lower lows and lower highs continuing, and we're in the bear market now. So in my opinion, at least for now, commodity, energy, oil itself looks like it has topped out. But the problem is, obviously it looks like it has been toppy for a while. We're not just all of a sudden, oh man, I think the top is in after it pulls back, 40% or whatever. But we came all the way down here to the 200 exponential, looked like we were going to get that bounce, and then immediately got a pretty bearish looking candle right there. I mean, we took out the previous candle, and then that one was decent size, and we ate through that as well. Now, we still have a couple days left in the week, so who knows how it's going to close. But the way it's looking right now, there's a possibility, actually, we even go a little bit lower and retest the lows, at which point in time, that's basically a three-line strike. Three candles in a row taken out by one big candle going in the opposite direction. And the probability of us actually retesting the 200, which to me seems very likely. And then we also have, it's not actually on here, but you can see very clearly, this level right here, right where the 200 simple is. If we just trace that back over here and look, and I'm just going to make that white so it sticks out, we could see that was the top right here. We saw a little wick action right there. And then it was a clear bottom right here as well. And then that lines up almost perfectly. I'm going to flash this off for a second with the 200 simple. So at this point in time, the fact that we bounced came all the way back down to it. And, we still have 2 days left. So maybe this gets bought up aggressively and, we close all the way back at the 236. I doubt it though. Looks more like, come down here, get a little rejection, bounce up, and then we're going to go slightly lower. And then from that level, we can start to reevaluate and look for a potential macro bottom. Now, we don't want to get overly bullish on the situation here, but we're back above the 200 exponential and simple on the weekly. We're retesting them. This should be the back test where they act as support. So technically, with the blue slope on both these, this should be a buying opportunity. So the real question is, if you believe oil is confirming back into a bull market, or did confirm back into a bull market way back here, like I do, you would think that this is going to act as support, either the 200 exponential, 200 simple, or somewhere around this range. And then we're going to go higher back into a macro bull run. So if the 200 simple is going to act as support about 65, 67, somewhere around there, $65.67. So let's call it 66. And we're at like 73 right now. So we're really about, roughly what, 10%? We're about 10% off what we think is going to be the low here. We have some bullish divergence that has printed. Now, it's possible we actually are going to move down here and invalidate this and print another spike. But, it's also possible that we come down here, put in a new low this week or the same low this week, and actually just print a third drive of bullish divergence. So we don't want to get too overly bearish on this thing. It has obviously pulled back quite a bit. Macro, we are still bullish. Weekly, we're basically at support. Fix this real quick. Look at the big picture. So what I'm looking at now is, essentially we're at the 200 simple, we're at the 200 exponential, 200 simple on the monthly, 200 exponential on the weekly. We're at this previous top right here. We have another potential support slightly lower in the 60s. We have the 200 exponential on the monthly here at like 64. Now the Stochs are powerfully angled to the downside. Histogram is all red since the top, and we're very close to confirming an 821 bear cross. So this is essentially should be bullish. We should bounce this level. We should go higher from here. It should act as support. But the truth is there's no certainties, and the market's going to decide for us. It's up to us to essentially just respect the move that the market, ends up making. So we shall see. I mean, there's a case right now where this thing has basically just put in a lower high from the all-time high, and now we're just going to come down and put in a lower low, or, at least revisit somewhere around the lows. There's also a strong case that, we basically bottomed down here, a series of lower highs and lower lows, and now we took out the previous lower high right here. We threatened the lower high before that, and there's only one left, so all we're doing is recharging before we go to new all-time highs. That's my base case. So we'll see how it plays out. Right now, I'm still very bullish on oil. I think medium to long term, I would say. Short term, though, it does look bearish right now, at least for maybe just a leg just slightly further down. If it does get down into the low 60s and that area does not hold, we start to see continuation or just consolidation at low levels. We'll reevaluate and possibly just be wrong about the overall direction of oil. But I think it's got another 10% or so to go potentially, and then it's really going to start looking juicy. Looking at the VIX, still kind of consolidating around the bottom of the range. You guys know, still looking for a nice push up here into like the low to mid 30s. We'll see. I mean, it looks like it's ready for a pop up here, but it's looked like that for some time now. Dow Jones on the daily, still above the 200 exponential and simple. That's crucial. We're seeing, I took some longs in the last couple days. We were talking about a little bit in the group here on some of the stock market indices and some individual stocks as well, because we're hitting some technical support levels. So the Dow Jones is first. This one is above the 200 exponential, above the 200 simple. And, 200 exponential is already positive. 200 simple is basically flat. So if we literally do nothing, this just gets bullish with time. So even though we just lost a slope line on the TDMACD, the Stochs have come all the way back down to the bearish control zone and bounced that level, got the hard buy signal, and the knife is back above the stochastics. So in my opinion right now, as bearish as you are in the future, or earnings, or, meteor strikes, or world war, or whatever it is that is like fear-mongering the markets right now, that's okay. And it's fine to look at the fundamentals, and it's fine to look at the technicals of the overall market and just paint the market with a broad brush. That's okay. But, the Dow Jones is doing something different here. And honestly, I have to respect it, because the truth is, the majority of the time when I'm like, I don't know if I trust it, next thing that happens, the system is right. And I'm like, oh man, it's crazy that you could design a system and then the system could be better at doing its job than you are. And the truth is, that's the beauty of the system. It's all technicals. There's specific triggers. And that way your emotions don't get caught up in it. If you got a bad feeling, oftentimes it's because you're at, peak fearfulness. So that being said, for now at least, Dow Jones still looking good. The key area to watch is us holding above like this 32,500 level. But, overall, it's starting to do what a chart has to do to look bullish again. And it's actually like triggering a lot of important levels. So we'll see in time what happens here. Obviously, I think this first quarter, maybe even just the first month of 2023 is going to tell us a lot about what's to come. So SPY doesn't look nearly as good. It's still below the 200s. It is, however, exiting the bearish control zone and, basically printing a hard buy, a couple green histograms in a row. So this doesn't have as many bullish things lining up, but starting to give us at least, some potential to come back up here and threaten that 400 level, which is exactly what I think is going to happen. We're going to threaten 400 and then we'll see what happens. Qs are basically down here at the lows, not showing a lot of life. That being said, few green histograms in a row, very close to that bull cross. The knife is above the stochastics. We're about ready to exit the bearish control zone. So I don't think it's too crazy to think that these markets really want to pop up here. And, in case you really are like super bearish on these markets, or you're like, you're supposed to be bearish right now, we're in a bear market, and you're not sticking to your guns. I'm not saying we should be like dollar cost averaging into assets that we want to invest in. But as far as like scalping and trading these markets, either with the trend or counter trend, there's definitely some opportunities, even in a bear market. So right now, most of the opportunities are things that are pretty well beaten down, having some kind of like relief rally. And the fundamental catalyst for that, if you need one of those to make you feel better or sleep good at night or whatever, would be essentially going into the end of the year, just about everything, year over year is down. So if everything was down towards the end of the year, there's no doubt in anyone's mind that there was a ton of tax loss selling in the last quarter, if not the last month of 2022. So if there was a ton of tax loss selling and then people have to wait 30 days before they can get back into that asset, there's potential that a lot of the things that saw those big capitulation moves or pushed back down and threatened the lows, or, went to new lows, or just showed weakness towards the end of the year, there's potential that a lot of those things will at least see some kind of a relief rally, as essentially that selling 30-day period comes up and then people reallocate into those same things. So maybe you don't hate the S&P, but, maybe you have some losses you could lock in. Or, maybe for a specific stock, maybe you still like Tesla, but Tesla got its dick kicked. So you're like, you know what? I'm going to go ahead and sell this Tesla, lock that in, the loss, or, however you want to look at it. Maybe you're still profitable, but you're going to go ahead and just pay those taxes and counter that off with one of your other losses. I'm not telling you what to do tax wise, but there's definitely some rebalancing and some tax loss harvesting that took place. So if that happened, which we know it did, a lot of that selling could be counteracted by more buying. So there is potential. Now, that doesn't mean we're going to reverse and just go back into a bull trend or a bull market or, to new all-time highs on everything or anything for that matter. But there's a good possibility. Now, it's tough to make that same argument for cryptos because the way the U.S. is, at least, and you may be somewhere different, the way the U.S. is, there's no 30-day period. So there's no, normally you have to wait 30 days before you can rebuy that asset or, arguably something, similar, which is sort of vague in its own right. But with crypto, that's not in place. So you can literally like take a L on your Cardano or whatever, or your XRPs or your, what's another one? Oh, Moon Rocket. No, Cum Rocket, whatever. Safe Moon. I didn't know Safe Moon blew up, guys. I've been like joking around saying that forever. And then I just found out it like went to zero. So sorry if I hurt anybody's feelings, but also I was right. So that being said, you might take a loss on that, but there's no restriction. You don't have to wait 30 days to buy it up again. So there's no kind of like delayed period. And, for some people, they might have sold in November and already bought back. But there's definitely a fundamental case that we could see some of these things pop back up, put in another lower high, and then continue lower after that. the truth is it's going to be all about, if we do get a pop, do we see momentum? Do we see continued buying? Do we see actual volume coming in? Or is it just, short dated options BS with no backing? So looking at the Russell next. So we did put in a higher low from that little double bottom right here. Still below 200 exponential and simple. Hard buy coming in, exiting the bearish control zone. Knife above the stochastics, multiple green histograms in a row. So it looks like we're at least going to come back up here and retest the 183 level. I know that's not far away, but once we get up there, that's basically, a hard resistance from this descending red resistance as well as the 200s. So if and when we get up to that level, I mean, it's not crazy to think that actually we're going to be starting to look at a technical breakout if we do get back to that level, where we could potentially see something on the Russell, a back test of 200, maybe even 209, and then this thing starts looking okay, starts looking a little more like the Dow. Does it have to happen? No, I mean, this is a bearish pattern. We have a flat bottom, we have lower highs, we're clearly in a bear market below the 200s. So, maybe this just comes back down here, revisits 163, and then breaks down from there. But there's possibility for at least some short-term bull action here. If you're interested in those scalps, or you just want to look for a good entry for your next short position, we'll sell into those rips. So XLE, we talked about how we may not see this directly correlated to the underlying commodities in the same way, energy in general, but, oil, nat gas, some of the uranium stocks, etc. There's definitely a possibility. Now, I'm hoping XLE stays strong. It has quite a bit of utilities in here. Utilities, one of the safety sectors going into, potential bear market recession, whatever. So we'll see how it holds up. It obviously looks substantially better than oil does or nat gas at the moment. So XLE is still looking okay. Still potential for that $100 target. The key is going to be, where do we find support? Is it another higher low? That's what we want. So, all right, sweet. That looks good enough. All right, so let's jump over here. So DXY had that 1 day little pop right here and then closed back down below the 8 and 21 again. I'm not seeing much strength out of DXY. And to tell you the truth, the more energy this uses up as it just continues going lower without putting in some kind of pop, the less pop it probably does get eventually. Now we know obviously nothing's going to just go straight down, but cryptocurrencies and also some pot stocks as well. Most things will get at least a pop somewhere along the way. I do still expect that from the DXY. But again, we're using an awful lot of energy and essentially just going down as we do. So maybe we get that pop eventually, or when we do get that pop eventually, it's probably going to be real weak. And then we're going to have plenty of energy left to continue to the downside. So it's definitely looking like DXY, depending what happens when and if we do eventually get a pop, it's definitely looking like DXY could be a little relief valve for the market and potentially let us see like a Q1 or even first half rally. So let's take a look at Tesla. So obviously we had talked about buying the bottom of the channel right here, and that did not work out. We fell right through it and essentially, kept a pretty tight stop, but got taken out of that trade. The next level we looked at was right here. We actually didn't even get an opportunity. We talked about potential setups right here off the 382. Didn't even get an opportunity to enter there. So took a final, I want to say final, but who knows if it's going to be the final stab, but took another stab at Tesla down here, only just because it's hitting key fib levels that we were potentially looking. I wasn't expecting for it to hit them this quickly, but went ahead and took a buy order off the macro 382. There's definitely some potential we come down a little lower to the 0.5, so I'm going to be watching 100. If we go down below that and start closing daily candles, I'm just getting out of the way again. I'll take the L and just sit on the sidelines. But I think we're potentially setting up for that bounce setup right here. So did take a long for now. Oh, sorry, I threw the wrong tool on here whenever I went colorblind. Pity the fool who comes in here and tries to like copy my charts. So like, why is it red on top? So we're looking at essentially something along the lines like this. If we take out that 0.5 in blue, which is the macro, it's about a 15% stop loss to the downside. The upside, I think I had it a little bit tighter than that. The upside potential is essentially somewhere around like 40% to backtest the channel right here. So it's about a 3-to-1 risk reward ratio. After some pretty serious selling, and that's also a measure move of the channel there as well. And then potentially also, that was the old short, which played out nicely. Oh, you know what it is? It's because the stop loss seems bigger because our entry has already happened and we bounced off that. So yeah, we entered off of the 382. So the upside was 48% and the stop loss was about 10%. And then, if we get a decent pop up here, maybe come up to 236 in blue or green, we could be looking at a much bigger move, somewhere around like 67 to, potentially 96%. Again, with about an 8-10% stop loss, something like that. So nice risk reward ratio potentially right here. Could it just get stopped out again? Yeah, definitely could. And again, it is worth paying attention to the fact that the sentiment on Elon Musk in general has changed quite a bit. And he's directly tied to Tesla, obviously. So if everybody hates him, so that gives him a reason to sell. And then also he's selling too, and he's the biggest shareholder. There's a strong fundamental case that this is just going to get stopped out and continue on its trek to zero. But in the meantime, I'm long, so we can all have a good laugh if it does. But we are down here, about to exit the bearish control zone. Hard buy signal, a couple green histograms, bouncing off key technicals, just hit the measure move. So it looks like a pretty juicy, compelling setup for me. So Microsoft fell out of bed, which is nice, obviously. Once we literally buy the bottom and then sell the top, immediately I just want whatever stock or crypto to just go straight to zero as fast as possible. So I feel like a goddamn genius. Even if no one else will ever know about it, or even if it was a small trade that will in no way change my life, you just want to feel good. So obviously Microsoft is doing us a nice favor here. There's some strong reasons why Microsoft is good. There's also, again, some fundamental reasons why we could argue that Microsoft is like completely overvalued and about to get wrecked big time. But technically it did bounce to 0.5 pretty convincingly, came back up and, shot above the 382, got rejected at that descending resistance and also the 200s. So we kind of have to play this one out and see where it goes. The fact that we didn't see the back test of the 236 leads me to believe that we could actually be putting in a higher low sometime in the near future and then continue higher and then eventually go lower. But right now it could go either way, honestly. I would not be surprised. But we are now getting a little closer to the 0.5. The thing we had talked about is essentially, once we got back down to the 382 and we were holding right here, the next target was either going to be continuation in the 236 or a back test down to the 0.5. And then that was the key essentially. And we were right in the middle of those two levels. So there wasn't really a compelling trade on either side. And obviously we have to favor short because we're below the 200s. So we're clearly in a bear market. So it's basically a coin toss with a slight favor to the downside. So obviously now we broke down below the 382. It acted as resistance. And then now we have taken a step down. So it becomes much more compelling the closer we get towards the area we're expecting to act as support. The same way, a short would be much more compelling or taking profit if we got up here towards like the 236 or something like that. So that being said, there is starting to be some potential for, a look at the 0.5 or whatever. But realistically, rather than just buying the same area again and trying to do the same exact trade again, which sometimes works, it does. It really does. And, milking a stock is always nice. But the truth is, if we come back down here to the 0.5, I really want to see then how it acts when it gets here. And then does it look like we're actually just going lower? And we know that there's a real case, not to get overly bearish. I know it's crazy, but there's a real case that actually we're coming down to those pre-Rona levels back down here, 2020, about 185, or potentially the macro 236 in blue, which is 166. And, all that is basically just like this whole entire bull run. So, right here in yellow, we have the internal retracement. I swear TradingView changes the colors of my stuff. They just do it to mess with me. So we have the short-term kind of like bull run we had from the Rona low all the way up to the macro high. And it's bouncing pretty technically overall. We broke down from the 236, came down to the 382, back tested the 236, came down to the 0.5, back tested the 382. So the next level I'm looking at is, basically coming down to the 618. So I'm looking for this trade setup, a buy at the 618, roughly around like 193, somewhere around like $200. And then we'll play that by ear. We'll see what happens when we come down to the 0.5 though, what the market looks like, because honestly, we're seeing some exhaustion in a lot of these things, and it's hard for me to believe that Microsoft's going to get beaten down a bunch and that everything else is going to rally, but Microsoft's not. But who knows? So keep an eye on that one for a potential scalp as well. A lot of these are pretty beaten down, so even though I'm still bearish overall on the markets, there's definitely some potential like counter trend trades. So also too, you know, when we're in a nice trade like this Apple short right here, it definitely leaves us open to kind of like, I don't want to say hedge, but you know, take some in the other direction too. So if suddenly like the Apple trade, you know, runs out of steam to the downside, you know, obviously we're short from way back up here, took some profits along the way, and now we're, you know, getting closer and closer by the day to that 31% take profit. And I'll probably front run it just a little bit as well, just because I'm not greedy. But we took out the low right here. So at any point in time, this thing could be, you know, one day or one big candle away from essentially like the trade being over. So we need to pay attention to that, because what that's going to look like is all of a sudden people like me closing this short is going to look like a bunch of buying opportunity, or buying activity rather, that comes in at some key Fibonacci supports, at some previous like key horizontal levels. So it's not crazy to think, let's just say we do drop, you know, suddenly another like 6% or so over the next couple days or weeks, whatever. It's not crazy after that to think that we could get a crazy like crazy short squeeze, or like take profit volume coming in, you know, with a 12 to 15% move back to the upside. And I'm not trying to give back this whole trade setup. So if something like that does happen before we get to take profits, we get to capitalize it by taking a long on something like, you know, crypto or Tesla or, you know, Dow or something like that. And if it doesn't happen, you know, maybe we lose a couple bucks on those other trades, takes us back out, and then this one hits our target, you know, etc. So we'll see how it goes, but it's never a bad thing to be long in some places and short in others, as long as you're in profit or have a good, you know, reason for those trade setups. And, you know, and a lot of times people will ask too about, you know, hey, I thought we were bearish on the markets right now. We're below the 200s. It doesn't mean we can't trade in the other direction. It just means that we need a higher risk reward trade setup, because the probability is less. Like, it's always a sliding scale. You know, there's never going to be a 100% chance of a trade. And, you know, we're not really as interested in 50% chances of a trade. We want some kind of edge. So if we don't have an edge on the probability of success, aka we're not trading with the trend, then the truth is we want to make sure that we overcompensate, you guys know what I'm talking about, with risk reward ratio. So that's why I use the rule, and I discuss it all the time, but you know, just to rehash it, that's why I use the rule. If you're trading with the trend, it's okay to take 2-to-1 risk reward trades. But if you're trading against the trend, we want at least 3-to-1, because for the extra risk, we want to be compensated accordingly. So Google is basically at the lows right here. It does look very weak. We don't see any divergence or anything forming. Maybe a bit of divergence on the stochastics here. A slightly higher low here and a slightly lower low on the stochastics. It's not confirmed on the TDMACD. So, you know, we want to see a little more confluence, but this is the 0.5 and this is the potential double bottom. This is also our measured move from the lead-in leg as well. So there's a strong reason this is acting as support. The question really is though, is, you know, we bounced the support once and then back tested resistance, the 382. So when we came down here again, I mean, is it going to hold? So if we just continue to put in lower highs, and eventually we're going to put in a lower low. So you guys know I'm still looking for a bite down here at 76.56, which is our macro 618 from the Rona dump. But in the meantime, you know, we're kind of just in this channel between the 0.5 and the 382. So we're at the bottom of the channel. You know, it honestly looks a little more appetizing to the upside. When we're at the top of the channel, it looks more appetizing for a short. It's about a 13% range right now. So would it be crazy, honestly, to enter into, you know, a position on Google right now? I mean, the thing is beat down as hell. It's 88 bucks. It's at the bottom of the channel, you know, macro fib level. It hit the measure move already. We see we are printing a hard buy signal. The stochastics are rolling over, getting ready to exit the bearish control zone. The knife is already up here above both stochastics. We see multiple green histograms. You know, I mean, we're starting to build a case for Google to have a nice push up here. And the truth is, even if we just come up to the top of the range, that's 12% with a pretty tight stop loss. I mean, if we start breaking down from here, we're not really interested. And in all reality, it's not crazy to think that really we come up here, retest the 382, and then actually get a break retest of the 200s. So, we could be potentially looking at anywhere from, a quick little 12 to 20% without even saying, oh, now we're bullish. Just a quick counter trend scalp. And again, it's hard not to admit that there's a lot of tax loss selling in here somewhere. For Microsoft, for Google, for Apple, all of them. Apple's a little different scenario though, because it took so long to sell off. So we talked about the same situation with Meta, how this looked like a capitulation, like, basically stop losses getting hit, or margin calls, however. So now we've come back up here, we've closed the gap, and, at this point in time, it looks like that potential setup here, little 37% to backtest this next level, looks probable. So congratulations to anybody that played that gap fill here, and might have another round of legs on it. It was actually looking pretty juicy today. Really, like decent at the beginning of the day. And then we saw that weakness kind of come in with the Fed minutes and everything. But honestly, people are like talking about the Fed minutes and, oh, they're going to keep rate. All the Fed minutes said was just all the exact same stuff that the Fed has been saying forever. There was literally no surprises in there. It's like telling your kids, hey, make sure to do your homework before you go to bed. And then they go to bed and they didn't do their homework. And they're like surprised you wanted them to do their homework. I mean, they've been saying it the whole time. Fed's been saying it the whole time. Look, it's going to get hard for a while. We're going to keep rates high for a long time. And now people are like, well, what's a long time mean? Wait, we're not going to immediately stop raising rates and then pivot immediately? I mean, the only way that happens is if something breaks. And honestly, it's been a very, very orderly decline, in my opinion. So, love the Fed, hate the Fed, but, they suck, honestly, at their job, but they've been doing a pretty good job lately. So, Amazon, maybe it's recency bias, though. Yeah, that's right. Actually, the Fed is terrible, and they are terrible at their job, and just overall bad human beings. It's definitely recency bias. What's that called when you fall in love with like your kidnapper or whatever? I can't think of the name of it, but you get kidnapped and then you slowly like start developing the obsession for the evil person who kidnapped you. That's like the Fed. They've kidnapped the markets, and now we're all being held. And slowly, Fed's not so bad. Kind of like those guys. Come on, Powell. Powell with his little ties. He's not so bad. He's a good guy. So anyway, Amazon, man, another one just really beat down here, but it's tough because, these things are hitting a lot of key technical levels. This is basically do or die, in my opinion, for Amazon. This is the Rona low. That's where we sold off to from the Rona low. And we have given back the entire move. I mean, we're here. We're back, at go. So, I mean, is this area going to act as support and then just suddenly we're going to go back into a bull market? Is it going to act as support and at least back test, 102? 20% move? I don't know. That's a tough one. I mean, this thing has been straight down too. And there's some signs on the indicator oscillators. It's definitely a dangerous scenario because the truth is, what are you really looking at? Upside potential, 20%. But if this area just suddenly breaks, if it doesn't hold and we do see the drop, the next level to watch is the 1.236 or the macro fib. So it's basically like 20 to 25% to the downside and, about the same to the upside. So that's coin toss in my opinion. So, even if you think, oh, well, Amazon and Google are going to do the exact same thing. Like they might move percentage for percentage over the next couple of months. But the truth is one could have an exponentially better trade setup than the other. And right now there's nothing for Amazon as far as trade setups. Now, if you were going to take a trade setup on this again, or I was going to, what I would do is I would take the long setup here and I would say, if we put in a new low, get me out of here. So if we take a look at what something like that would look like, we're just going to put in a super tight stop loss. So if we took an entry, let's, basically where we're at on close today, we're looking for a back test of this key support, which acted as resistance. Kind of already back tested it. So was that already the rejection? I don't know. We'll see. But it's 20% upside and, a tight stop loss, essentially a new low, taking out this low right here, taking out, that macro low. We reevaluate from there because we could go much lower. We don't want to just hodl and just see what happens. So 5% stop loss, 20% upside, 4-to-1 risk reward ratio is actually not bad. It's counter trend, obviously, so it needs to be at least 3-to-1, but it's really not bad. Now, could we see a big gap down and a meta situation? It's possible. It's definitely possible. And I don't like trading counter trend when we're seeing like big erratic moves that would not work well for the trade I'm looking at. But, setup's a setup. So it's worth at least acknowledging the potential is there for Amazon. I might have just said Meta, but I meant Amazon. All right, moving right along. So let's actually jump over here and take a look at a couple of these bad boys. So what's going on, Durwood? Good to see you. 2023 world is in full effect. I know that's right, man. Expecting big things. Yeah, me too, man. Me too. Definitely going to be a big year. What's up, Eli? Good to see you. Stockholm Syndrome. That's it, man. We got Stockholm Syndrome with the Fed. Thank you, dude. Thank you. That's exactly it. I feel like, man, over the last few years, that like something will be right on the tip of my tongue and I'll just go full on brain dead. So, but yeah, definitely Stockholm Syndrome with the Fed. Like, I kind of like him. Like, Powell's kind of like, he's kind of cute. So, starting to kind of like Powell. He looks cuddly. So looking at gold, gold spot markets are looking pretty good, guys. We've been talking about it. I try not, you guys know how I feel about gold. I definitely like gold and silver for sure. I don't like the culty bullshit and I don't like the fundamental, worshiping. But that being said, I get it. Right now, gold's doing some important stuff. It obviously chopped around all last year, last couple years, put in a new low, which is not good. But it has reclaimed the 200 exponential and the 200 simple as well. 200 exponential is getting ready to cross and back up over the 200 simple. So as weak as it was here for a while, it's pretty strong recently. Now, the thing we have to be careful of is the potential that we're just doing a little internal retrace situation here. So if we turn this yellow here, we already cleared the 0.5 on the internal retrace. From the previous peak right here, which is like just over 2,000 to the recent low right here at about 1,600. We're very close to 618, which comes in at about 1879, call it 1880. And then 786 is up here at 1961. So, essentially what that would be is, hey, we came down here, we had a pretty aggressive sell-off. We get a nice bounce back to the upside, but oh no, we put in a lower high and then we continue back down here. Now, the other option is the actual trade setup that we were discussing here, which is this inverted head and shoulders. It obviously didn't come back down and give us the other shoulder, but, we essentially look at it as still the same setup, just slightly less useful. It's not really like a double bottom then, but honestly, the mentality or psychology of it is still there. The psychology is, hey, we have a recent high right here, and it's resistant. And if we break through that recent high, we likely get what amounts to either a measure move or a retest of key fibs, etc. Well, that's exactly what happened. We came up to that resistance, we banged our head on it instead of coming back down and putting in a higher low and then, for forming a potential inverted head and shoulders. Instead of that, we just broke through those 200s, we broke through that resistance, and now we're just creeping to the upside. So the next target seems likely 618. After that, 786, and then we can start paying attention up here like, hey, does it look like it's going to top out again, roll over, and then come down here, potentially put in new lows. But the truth is, in all reality, this makes it a little ugly, this little consolidation down here. But I mean, the real truth is on gold, if you want to just break it down to the most fundamental, basic way we can look at this, we basically topped out in August of 2020. And we are just trading inside this range. Now, we can move the range down here to encompass this little trading action. But honestly, I think this is really the range right here. And I think this right here is essentially just a spring, a little breakdown, a false breakdown, a failed breakdown, whatever you want to call it. But now we're back inside the range. We're back testing the heart line of that macro channel. And if we break through that heart line, obviously there's a couple fibs on the way up, but it just takes us all the way back to the bottom, to the top of the channel. And then once we're back at the top of the channel, it's going to look real bullish again and everything. But, the truth is, more likely than not, we just probably top out again and then come back down to the bottom of the channel. So I'm looking at this still as just a macro trading range. It's pretty sad that gold was like one of the best performing assets last year, and it was just because it kind of went like sideways. But that just shows you how rough the year was. So part of the problem with gold is if things start rallying, if we do see a strong year, if there is, things just aren't as bad as we thought, or the war ends, or the energy crisis, is averted, whatever the situation is, if other stuff rallies, it's going to be very hard for gold to rally too. And we know that because we've seen in the past when, everything else is doing well, people aren't really that interested in gold because they'd rather put their money somewhere else that's going to treat them better. When people are unsure about what's going to happen, that's when gold typically does better. Now, if you lived in another country, your gold chart might look completely different than this one. Our gold chart doesn't look particularly well or particularly good, but that's because the dollar has been pretty strong over the last few years. So if your currency has been shit over the last 3 years, your gold chart probably looks awesome right now. And that is a big factor in my opinion, because even though, obviously I'm biased, I look at everything in US dollar or my own currency or, because we're the world reserve currency, whatever. But the truth is, if gold looks really good on everybody's chart except for the dollar, it's probably just a matter of time before it looks good on the dollar too, because it's really all relative. And we've seen some weakness in the dollar lately. So maybe we are getting ready for that scenario where all of a sudden gold starts breaking out and looking pretty juicy. We're definitely fighting for it. The bears are dead in a lot of these markets, or bulls rather are dead in a lot of these markets, but not in gold, man. Bulls are still kicking. And, at the absolute last minute, they stepped in. So let's look at silver here. It's been pretty weak. A bunch of lower highs and lower lows. Back on top of the 200s. Avoided any kind of bearish divergence or anything, even though we are seeing some on gold. Silver actually looking okay. The next key level to take out is, obviously 25 is the level we've been talking about. We're almost there now. Arguably slightly higher, but we have the heart line right here at about 25. We have the top of the channel right there, or the top of that resistance, I should say, descending resistance from the all-time high down here. So if we get through that, probably we're going to be retesting like $30 pretty quick. And you know what? I hope it is. I hope we do. So Silver Junior got above the 200s here, pushing up. These are looking decent for the remainder of that move to the top of the channel, about like $15. GSG looking substantially weaker. So we talked about this here. We put in a lower low right there. We're confirmed into a bear market. We broke down, tried to act as support here, and it failed. Broke down to a new low, back tested, it acted as resistance, and now we're threatening the lows again. Looks like we're ready for a drop. We talked about essentially this macro blue box, obviously because it was drawn on a longer time frame. But the truth is, somewhere around a back test of like $18 looks pretty probable, possibly as low as 1650, the 382 there. We'll see how it plays out. We will see how it plays out, but it's starting to look pretty probable. Obviously this was a 236 test right here. This is the previous high right there, and this is our macro fib. So that's what I'm looking at. Realistically, we should tighten up this box just a little bit and have it be a little bit more something like that there. So we'll see. Maybe we see some support here temporarily, but I think more likely than not, we do end up going lower to one of these other targets. So LNG. So we broke down from that ascending wedge. We came down, retested 200 exponential and simple, and then just blew through that. That should have acted as support and been a buying opportunity on the back test. Some key fib levels and everything. And we saw a pretty heavy capitulation candle. Now it looks a lot worse than it is percentage-wise. It really wasn't that bad. But we blew through the 618, turned around essentially in the middle of nowhere. So we'll have to look at the longer time frame and see. But hard buy signal, trying to come out of the bearish control zone. This is likely a capitulation, stop hunt, margin call type scenario. And then we just gapped down and shot back up. So the real question is going to be, if and when we get back up to about 150, what happens? If we reclaim that level, this is going to look okay, and it's still technically a higher low. But it's not looking so hot right now. We have not seen this thing violate the 200 exponential and simple. We obviously got a hard bounce off of them in July of 2022, but we haven't seen Cheniere Energy drop through the 200s like that literally since the last time we were in a bear market and we were below the 200s on the daily was back here in like 2019 going into the heavy Rona sell-off. So, this thing could be looking at a deep retrace. I mean, I don't want to get ahead of myself right here, but I mean, it wouldn't be crazy if we're looking at this chart, a few months down the road or a few quarters down the road or whatever, and we're down here at like 116 or potentially like 87. And that's at 144 right now. So we're talking about almost another 50% sell-off potentially over time. But even 115 is going to look pretty brutal if we end up getting down there. But it's worth paying attention to what's happening here on the macro as well as that previous swing from July 2022. Losing this white support level was a big freaking deal. And that's also the 200s as well and some key fibs. So this is either an epic squeeze right here or shakeout, or this thing's about to be in trouble. So really, really needs to reclaim 150 or else. All right, so Mosaic, MOS, little fertilizer action. So we did come down here and put in a new low. We're at that key support. Obviously, we break down from here. We lose this level. This looks like distribution taking place. Lower highs and, essentially technically lower lows. Confirmed into a bear market. Basically a descending triangle. Looks like it wants to break down to like that 33 range. And again, we'll see. I would expect at least some temporary support here at this level we're at right now from this previous low, that previous high, and then again somewhere around like 37 or so. But the real target's down here about 33. And it doesn't mean that these fertilizer trades and food and energy and all these like macro, stories that we've been told, it doesn't mean they're not going to play out. It just means a lot of times people get ahead of themselves. So it's possible we see, the energy trade start being bad or continue being bad, and we see all these other narratives everybody's been pitching about, the food and the energy and the fertilizers and all these other things play out over the next like 3 years, but people are way too bullish or bearish on them ahead of time. And then we see counter trend trade take place. And then eventually you're right. But by then, you're down 40%. So be careful with the like really compelling narrative type stuff. You're like, oh yeah, that makes perfect sense. I could totally see it. Because chances are, you might be right. You probably are right if it's that compelling. But the timing is so important. So CCJ is next. That's another one where I just feel like, this got overcrowded. Everybody got into all these uranium plays, nuclear stuff. And they've been really underperforming lately. Now, they've been holding on, at least. But we have officially confirmed into bear market. And we're only going to get so many chances to reverse this trend. So CCJ needs to get its shit together. Really, all uranium stocks. So Tilray came down here. We did put in new lows from our recent low. I think we're still like a couple pennies off of the all-time low. Yeah, so we didn't quite come down to all-time low. We're a couple of pennies away. I'm going to count it as a retest of the lows, but you guys know obviously I'm holding out till the lowest low ever put in, and then I'll be interested in Tilray. That being said, had a nice little bounce here off of the lows. Probably, there's at least some potential for a nice little move back up to like 350, maybe a little 15%. Hard buy signal, a bunch of green histograms. Looking good right here. For a scalp though. And we know if there's one thing about these pot stocks, we don't overstay our mother freaking welcome. Because damn, if you ever don't take profits, they will be sure to take back those profits and make you regret it. All right, so UNH is next. So we're going to look at the big ballers in the Dow Jones. So United Health, this is a big deal right here. Obviously this level should have hold. This ascending support right here in green The 200s should have held, and they didn't. And now we're threatening the previous low right here. This is really the one we want to pay attention to, but it's worth noting here. We have also our fibs in place. Worth watching. I guess at this point in time, realistically, we should probably just swing that fib. So we'll get rid of this internal fib, which should have been yellow anyway. We'll get rid of that one, and we'll just fib from the bottom here to the top right there. That's right down to the 0.5. So we came down to a 0.5. We came up, put in a slightly lower high, basically double top. And now here we are down at the 0.5. We have lost the 200s. We have lost the ascending support. Prior to putting in the high, we touched the 618 perfectly. So this is trading very, very technically, even prior to putting in the swing. So definitely some algorithmically driven trading taking place right here. So that being said, if this area doesn't hold, I would expect a move back down to the 618 and then potentially 786. So 488 looking juicy right now. This is the biggest stock in the entire Dow Jones. So if we continue to see weakness in healthcare, in particular United Health, that could, potentially cause the Dow to lose the 200s and, not look so hot. The knife is basically through the floor right here. Here we had a knife low and it went substantially lower. Here we had a knife low and that was the exact low. Here we had a knife low and that was very, very close to the low. So it's not perfect by any means, but it is starting to look like there's some potential. It's at least putting in a short-term bottom. I don't think it's crazy to think this bounces back up, retests the 382, possibly even the 236, and then we see, does it get rejected and go lower from there? That's probably what's going to happen. But this is telling us, hey, maybe that Dow trade is actually about to fail. Next, we have Home Depot. So this is the resistance we've been watching. If we can get above this resistance, we want to go long on this thing. If we lose the 200s, we don't want to be involved with this anymore. So, honestly, decent little trade setup right here, 16% upside, 8% downside. That's assuming, that we're in a bull market, which we are above the 200 exponential. 200 simple is basically flat. So, technically we are confirming into a bull market or very close to it, coming out of the bearish control zone, close to getting a hard buy signal. Little mixed signals here. Blue slope line is actually very close to like turning red. But oftentimes, this is, the best. This is basically the best area to get an entry if the long-term trend flips back to bullish. So we shall see. We shall see. So Goldman Sachs, holding on the 200 exponential for now. I don't think it's crazy to think we come slightly lower to about 328, maybe the 0.5 to about 334. But again, this is confirmed into a bull market. So not crazy to think this will be at new all-time highs, a year or two from now, maybe a couple months from now. Caterpillar just absolutely crushing it at the highs right here, just threatening to take them out. So we're either about to put in an epic double top or this thing's about to rip. It does look pretty tired here. The slope line is still blue for now. I mean, I'd be crazy to get bearish on this. So short term, sure, there's some resistance here. But honestly, I mean, CAT is like one of the best looking stocks in the market right now that's not at all-time highs. McDonald's had that pullback to the 200 exponential and simple. We have a little more support down here at about 239. The way these markets look, it's not crazy to think we're going to get one big candle that takes us down. A bunch of stocks have like recently done that. But again, hard buy signal coming out of the bearish control zone, bunch of green histograms. A lot of these things are beat up and at some pretty key support levels. So not crazy to think we're going to see some counter trend moves. And again, that lines up with all that selling at the end of the year, all that tax loss harvesting. Amgen is next. So we broke out from this key resistance. I mean, this was solid resistance. Shot straight up here, came all the way back down, testing it. This is the entry right here. Now, do you have to trade a breakout back test and then look for the Fibonacci extension? No, not at all. You can trade however you want. You can literally, long a breakout. You can only buy support. You can only buy a breakout after we retest the resistance as support. The more strict you are, the higher your probability of success is. And to tell you the truth, this thing recently broke out to new highs, came back and back tested what was resistance over and over again as support. This was our trade setup that we were looking for. And honestly, it looks good from here. So again, 28% upside, possibly a little more up to the 1.618 instead of the 1.5. And we can run that with a pretty tight stop of about 4 or 5%, giving us, roughly 6 or 7 to 1 risk reward ratio in, again, one of the stronger looking stocks in the markets. Compelling story for the Dow Jones to, continue higher from some of these things. And also, a couple of them threatening the trend. So really what a couple of these big players do, UNH and some of these other big Dow stocks, probably going to be what determines the overall direction of not just the Dow, but all the markets. So Microsoft, we still have on the double chart. So Visa has, basically been hanging out. Technically, it has broken out of descending resistance. It's very close and threatening, once again, our horizontal resistance. We're above the 200 exponential and simple. We broke above them. We back tested them as support. They're holding. This thing could be about to be off to the races. Again, used up a lot of energy and losing the slope here, but down at the bottom of the levels on the stochastics, coming out of the bearish control zone, hard buy signal. And a few of these might look like they're about to pop off. So yeah, we'll see. A couple of these looking pretty juicy. Percentage-wise, some more than others. So Honeywell, very, very close to the magical squiggly support right here. You guys know, obviously, that is my base case. And, there's something super special about the magical squigglies. So if and when we do get there, you guys know what that means. And if you don't know what it means, come on, guys. Get it together. So assuming we do make it to the magic squiggly, you guys know exactly what to do. We have confirmed into the bull market. We're back testing support and then full-on moonshot after that. But also, red slope line, man, we're getting some serious mixed signals from these markets here. Serious mixed signals. Some of these things, even the ones that are looking juicy, are still like, but maybe I'm going to still have you in the A. Not in a good way. TRV, Travelers Companies, still hanging out here. You guys know the longer we go sideways at this level, the better, honestly. If we don't break down from here, this looks more and more bullish by the day. But, we talked about essentially this rolling over. It's rolled over a little quicker than I thought. I obviously gave it a little more credit with my hypothetical green line here. It immediately just started rolling over. But this is the base case for what a rejection would look like. But even then, we backtest key support and then can go much higher. Dow Jones and some of these big players are really building a compelling argument. So Deere is still filling that gap. We're almost there now. There's a little more to go. But honestly, if this level starts to hold around here, either the 786 or the 200s or the ascending support or just all of it right around this level, starts looking pretty good for the breakout. New all-time highs, 1.5 to 1.618, 40+% upside potential. So pick your favorite one. Place your bets. See? Place your bets. So UUP, the dollar DXY proxy, pretty weak here still. Quite a bit of bullish divergence. It looks like it wants to pop off, but it's also looked like it wanted to pop off for a while. And if this thing pops off, that's not going to be good for the rest of our trades, except for Apple. The Apple trade will be nice. VXX, the VIX proxy, new lows on this thing. Now, it's designed to continually just melt down into oblivion. But that being said, man, if we're not close to some kind of pop on this thing, what is it going to look like if it does? Even if it's a weak pop, underperforms, at this point in time, we're talking about like a 30% backtest of those previous support levels before discontinuing to 0. Lululemon, so pretty ugly chart here. Descending channel, breakout, backtest of support at the 200s. This is it. We're right at the key level. So even if we are just scalping this, 30% upside to the 786, with a roughly 10% stop loss, about a 3 to 1. And right now, it's hard to argue that we're in a bull or bear trend, and we're technically fighting for one direction or the other. So there's enough support here that there's a compelling case for this little 3 to 1 trade regardless, or slightly worse than 3 to 1. If we retest the highs too, closer to a 50% upside with 10% stop loss, so more like a 5 to 1. But honestly, looking okay. looking okay. Quite a few of these look like they're basically confirming into a bull market. You know what? And we're going to talk about China, I think, probably on Friday, because China is, obviously been getting wrecked and underperforming, but some of the Chinese stocks, big players, are starting to potentially be like threatening or at least like, lighten up the sensors for a potential, looking like they're potentially moving back into a bull market. At least retesting the 200s. So maybe some of these underperformers like Bitcoin and some of these other trash stocks and cryptos that have been avoiding their 200s like the plague are getting ready to hit them, because those Chinese stocks were pretty beat down and they're starting to look okay. Carvana came back down here to the lows. This is still wreck city. The gap fill is 663. Not crazy to think this has a 30% move before it goes straight to zero. 35% move before it goes straight to zero. Sorry. But yeah, that's a 1.236. Obviously, I'd rather see it at one of the other Fibonacci's. Cabot was a request. Just consolidating below 200s, confirming to a bear market. Not good right here. Seems likely it's coming back down here to the lows, and then maybe we get a back test. But to tell you the truth, this looks like the trend is flipping from a nice bull trend to a potential bear trend. So I would expect much lower prices on Cabbage Corporation. Give or take a letter. Okay, so I guess just because I'm on BNB already, we can just stay here. So obviously I'm not trading this. BNB's total trash, and it's definitely going to zero. Probably tomorrow. The exchange is definitely going to go under. CZ is 100% for sure going to like skip out with everyone's money. That being said, if you didn't believe any of that to be true, or even if it was true, you were just going to trade it anyway, BNB's got a decent setup here. So we talked about essentially reclaiming the 236 and how this looked bullish. We got a nice little pop there. We're next threatening the 200 exponential and simple, the heart line, the 382. So that puts us back at about $300. So that's about a 20% move? I mean, depending on where you're going from. We'll just go from where we're at now. Talking about, roughly about 16% move there. Obviously a much bigger one to the top of the channel, and maybe the 618 this time, maybe just the 0.5, somewhere in between. But there's an argument to be made. Hey, we're at support right now. And you're like, well, how do we know that support? We just came down and touched it once. Well, we had these 2 points right here. And when we extend out the channel, gave us that support. So somebody else doing the same thing we're doing. We broke out of a descending resistance, back tested it, found support, formed an ascending channel, back testing the 200 exponential and simple, the heart line, the 382. Not crazy to think BNB's setting up here. Now, here's the problem. The knife is like through the freaking roof for this little itty bitty move. Now, this doesn't have to top out at 100, obviously, because it went to 110. This can just go to a gazillion. There's no limit to the knife's potential. It will cut you. That being said, it nailed the bottom right here, the knife to the downside, and pretty aggressive knife to the upside. So we're going to find out real soon. Very close to 821 bull cross. So, 251 is basically, or 250 is like the line in the sand. It's the 821 bull cross. It's a 236. It's a potential breakout for the back test and further upside. Momentum in its favor, even though technically we were still in a bear market. There's something here on BNB. I guess we'll just keep going backwards. Cardano, still trash, completely useless, total garbage, just completely melting down. I mean, it's so terrible. Again, the knife is pretty elevated here, and it's gone nowhere. It's hard to look at. It's hurting my eyes. I've got to look away. XRP, not much better. Did have that shakeout candle down here, that wick, and then came back up. So technically still below the ascending support, but reclaimed the 618. Again, technically a bull case scenario for like a 17 to like, I don't know. There's way better cryptos. Just buy the other ones. Actually, don't buy any, because crypto. Because Ponzi scheme. Matic, again, holding on, trying to recapture these 200s. I don't love how this one looks, but it looks still better than most. The problem with this is you either take a shot at this thing and try to trade back up to that 618, or maybe even just the 0.5 with a pretty tight stop loss. Yeah, there's something here. I mean, we could look at something like this. That one little candle down here. Yeah, I don't know. Yeah, there's probably nothing there. You really gotta get the 618 for it to be worth it. A little bit of bullish divergence on the daily. I wonder if this thing is getting ready to pop up here. I mean, that's 53% upside with a 9% stop loss. But you really need to clear that zero point 0.5 for it to be profitable. I mean, but the truth is, though, you readjust your stop loss, and by then you're already in the money, so who cares? I don't love it, but there's an argument to be made. Oh, accidentally XRP'd it up. Dot looks terrible. Polka dot. I mean, just melting down here. Again, a lot of energy getting used for these cryptos to go basically nowhere. That is not what you want to see. I mean, realistically, this wants to go back to like $5, 5.15 maybe. But I don't know. I mean, I don't want to buy the three-legged horse of crypto markets. Avalanche had a nice little bounce already for the back test of support. There's quite a bit of resistance here now, though. So it's going to be hard for this to go any higher than like 1250. Still like 20%, though. Chain link, stinky linky. Just put in a new low. Trying to do something here. If we can get back above like 594, let's call it $6. You know, this could easily go to 7. So, I mean, there might be something there. 15% or so. Maybe a little more. I mean, they all have basically the same setup. You just got to find the best one. Solana was by far the weakest. I mean, this thing was definitely on its way to zero. But now, look at that. All of a sudden, it's good again. Hey, Solana's not so bad. So, I mean, from the wick to where we're at right now, it rallied 64%. Yeah. I mean, so if you bought the absolute bottom and you held it, you're looking good right now. But goddamn, if it's not dangerous to try to get in after this trash that's down, whatever, 80 something percent, just rallied 64%. That's the beauty of it too. You know, just for reference, Solana dropped 96.88%. So you lost 97% of your money. So if here you had $1, now you have $3 left. Congratulations. And then it rallied. It dropped 96%, and then it rallied 65%, and that's where it's still at. So that is why I always take profits early and often. So it rallied 60-something percent, and it's still down 94.93%. So it went to zero. Dear God. I mean, but the way this capitulation took place through here from like $28, you know I hate Solana and it's total trash. But I only ate it because it's total trash, though. I don't actually care about it. But because it's total trash, complete garbage, does make me slightly biased. But I mean, the truth is, this thing basically capitulated in 2 days from, you know, what amounted to $30 down to the close, which was like $13. So it lost, you know, 60% of its value in 2 days. So if it does take out, you know, basically 1470 or whatever, this little resistance right here. I mean, if it does take it out, it's not crazy to think that this just pops straight up here and retest resistance. You know, quick little 100% move. A hundo. Now, full disclosure, obviously, if you listen to anything I'm saying for any reason other than entertainment purposes, you'll lose all your money. I promise you that. And you will live in a van down by the river. But, you know, obviously you can't use the low down here as a stop loss. But if you just use this previous support, and obviously I would never enter this trade because I don't buy scam trash cryptos anymore. Not this year. 116% upside, 17% stop loss, about a 7-to-1 risk reward ratio. But I mean, honestly, I'd say this 50-50, it goes to zero. But if it doesn't, it could look okay. So cheese is bouncing the descending support. Was resistance, now support. Here it is. Wants to make a rip. I mean, this has been the crypto to own for a while here. Definitely outperformed everything up until the last like month or so. Maybe this one's getting ready to go ape shit and put in one of those 80, 100% moves. We'll see. I mean, a lot of these cryptos are setting up. It's just pick your favorite shitcoin and gamble on it. Bitcoin dominance without the stable coins. Still above the 821 and bull crossed. Backtesting as support now. If this area holds, we likely see the altcoin rally fail and, Bitcoin just hold a little more of that value. Everything included, again, backtest the 821. This includes your stable coins. So it does look like Bitcoin is gaining on the weekly. Total market cap on the weekly, just hanging out at the lows. Does not look good. Not cool. Ethereum crossing that 821 on the daily, back bullish. Bitcoin didn't quite do it, but is at least back above it. Ethereum obviously has been performing better than most anything lately, so not crazy to think that it's going to be outperforming slightly or leading the market slightly. If Ethereum stays strong, 1387, potentially 1511. But the truth is, it's all up to Bitcoin. We're very close to that 821 cross on the daily. Obviously, it looked like we're about to lose the 821 on the 4 hour and then cross back up and essentially just shot straight up to backtest the 200 exponential and simple on the 4 hour, which you'll just have to picture because I can't be bothered to click one time. Actually, twice. Let's not exaggerate. But that being said, the daily is very close to 821 cross. What does that mean? I mean, it failed right here. Did have a nice little run up. Failed right here. Did have a nice little run up. Failed right here. Did have a candle up. Failed right here. Whatever the fuck that is. So what does it mean? I mean, you guys know the longer we go without touching the 200 moving average, the more likely we are to hit it. I mean, we're going to hit it eventually. So every day that goes by, we're one day closer. We just don't know if it's going to be 1,000 days and we're one day closer or, 12. That being said, we're building up momentum on the indicator oscillators, potentially crossing 821 bullish again. If and when we do, we should immediately threaten that previous high right here at like 17.8. And then the truth is, there's a lot of resistance through here, but, we could be setting up for like a 16 to 26% rally. Potentially. Do I think that's going to happen? Yeah, I honestly do. I don't want to be like too bullish on these things right now, but I really think we're setting up for everybody is so convinced right now. And again, I hate to always just be the opposite of everyone else, but everyone's really convinced right now that we're just going to have a terrible first half of the year. And then the second half of the year is going to be really good. And like, that's it. And then we're just back to the bull market. So what if it's just actually like the opposite? We finished last year really weak. Statistically, we don't have 2 down years in a row. So, we have to finish the year strong. So the weakness has to come first. What if it's the opposite? What if we start to rally and it starts looking good in the first, month, quarter, half, and then we finish off the year weak as actually like reality kind of sets in? That seems more likely to me. So, I think I'm more bullish early in the year now and then probably less bullish on a long enough time frame. And, that goes for all the risk on stuff. And you're like, God damn it. How do we keep up? I mean, you just have to watch all the streams. So we talked about the Toy Story on Christmas, and we're just going to revisit those because a lot of these like setups and potential, things we were looking at may be getting ready to like pop off here. Okay. So Santa Claus has left town and some of these toy companies are acting a fool. Funko Pop setting up for a 53% move. Obviously had that gap down, meltdown. Found some support here, consolidating. We have a pretty clear resistance on the daily. Cross 821 bullish, blue slope line, all green histograms, hard buy signal. We could set our stop loss below that fib at like 918 with the target of the other fib at 1670 or the 200 exponential and simple or the heart line. Or that's a made up heart line. That's part of a fib. Don't listen to that. 53% upside, 17% downside, 3-to-1 risk reward ratio. I mean, there's something there. Or it just fails and goes straight to 0. But there could be something there. So Mattel, essentially a little double bottom action right here. 1, 2, 3 drives of bullish divergence. 1, 2, 3 drives of bullish divergence on both the TDMACD and the Jewel Thief as well. And here we are at the heart line of our little double bottom pattern. If we break through this, measure move. If we break through this, the measure move should take us back up to first to 382 at about $20. And then after that, the 200 exponential, the 200 simple, the $21 range. I'm not bullish on this long term. I think it's going lower, obviously. You guys know we move all the way up here. I think we're going much, much lower. But, 14% upside with a 5% stop loss. The real trade, though, is not even necessarily the long breakout right here, but it could be the short off of the next push to the upside. Because when we really zoom out on this, and, if you watch the Christmas stream, actually, I think we're going much, much lower, and the short trade setup could get real, real nasty. Because this was our whole, moving average-wise, this was our bull run right here, basically confirmed into a bull run in 2020, ripped to the upside, and now here we confirmed into a bear market. So what is this? Well, we confirmed in the bear market, dropped, the floor just fell out from under us, bloody waterfall, W double bottom, breakout, back test of the 200 exponential confirmation of the bear market, and then we just go to a lower low. So, sell the rip. So maybe buy the dip, sell the rip, double sell the rip, go short on the way down. Live in a van down by the river if you're wrong. Live in a private island if you're right. 12% stop loss, 50% target to downside. Could go much, much lower. Could go to new all-time lows. Could be Wreck City in this biatch. But yeah, definitely some potential there on Mattel. Soft L Mattel. Hasbro, same little double bottom setup right here. Potential upside target, 18.6% for the measure move. The heart line, the 200s. Literally like the same thing. But just like at life, it's doing better. So based on the resistance up here, obviously this crazy like wick down thing, whatever. But, it worked here, so we'll trust it. But again, the truth is, it probably goes lower. This is probably just another retest and another lower high before we eventually go to 45. But scalp-wise, there's something there, potentially. Target broke down from that little triangle. Looking a lot more like a channel right now. Maybe we just got ahead of ourselves. I don't know. We're still getting some play out of this, like ascending triangle support / other random turquoise line that's back behind it. We broke down. We're back testing it. Let's see what happens. I mean, potential for target, 12% upside. There's probably not much there. We're a little late to the party on this one. Hard buy, a bunch of green histograms. I don't know. 12% move. There could be something there. 2 more to go, and then we're out of here. Walt Disney, a nice little pop. Broke down from key support. Broke down to new lows. Back testing that support as resistance. Hard buy signal, a bunch of green histograms. I mean, depending on how you look at this, we could pull some divergence off a couple of these points right here. I don't want to cherry pick it. I mean, this thing is beat down. The truth is, if we can reclaim this level, we probably have 15%. Already off the lows quite a bit, though. Yeah, I mean, it would be like a 2-to-1 risk reward. I don't think there's really anything here on Disney, but worth paying attention to. And then finally, Walmart reclaimed the 200 exponential and simple, flipping them back bullish, or at least trying to. Hard buy signal, a couple green histograms, at support right here. I mean, we will see. We're basically have a weird consolidation because we put in a high, then we put in a higher high, we put in a low, then we put in a lower low. So this is our macro high, this is our macro low. So far, we just have a lower high. So realistically, until we take out either this high or this low, it's basically a crapshoot on this one. And again, this range has basically been, I mean, with the exception, obviously, of that little poke out the top there, this is basically the meat of the price action has taken place inside this channel. We had this little breakdown here, broke and started the rally. We had a little breakout right here, failed, and, you know, took us to the lows. So we're back here, you know, back of the heart line. Probability says more likely than not we're going to test the bottom of the range. Starting to, it's trying to flip bullish again, but there's been so much consolidation here. So many times it's flipped, you know, bearish and then bullish and then bearish and then bullish. Hard to trust the moving averages right now. When you start consolidating for a long period of time in a range, the moving averages become almost useless. You know, eventually they just basically flatline. And then it's like, well, yeah, we can go above them, we can go below them. But until we pick a direction, they're not really good for anything. They're basically for momentum. So trying to save the trend right now after a real strong bull trend. But the truth is, we're basically just range bound on Walmart. All right, that's all I got for today. Hopefully you guys enjoyed the stream. If you did, smash up the like button. What? BitConnect. All right, let me jump over in the chat here real quick. Nothing going on. Little Stockholm syndrome. God, where do I come up with this shit? That's awesome. So yeah, we'll go ahead and wrap it up there. Hopefully everybody enjoyed the stream. Appreciate each and every one of you guys. Happy New Year to everybody. But yeah, that's it. So we'll go ahead and wrap it up there. It is Wednesday, 9:23 p.m. Eastern Standard Time on January 4th, 2023. As always, please remember this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. So please do your own research and trade responsibly. Crypto Trend Trader with our midweek market update. And I'm out of here. See you guys on Friday.